Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening as we're here now on Thursday, and we're at the 5th of January, 2023. It's hard to say all that for me, at 6:30 p.m. Central Time. Now, I have a philosophy that I don't like positions on that could be impacted in a major way off major reports. This whole week has been what I call Labor Week. L-A-B-O-R for you in Europe, L-A-B-O-U-R, right? And that's because we're getting so many reports. We had the JOLTS yesterday. ADP today showed what? Growth, a lot of growth, double what the market actually was looking for. Then we take a look at Challenger Gray, and what we saw out of them, out of the corporate layoffs, only half of what they did last month. Then we looked at unemployment claims, and they fell. They didn't go up, they fell. So you're not getting at all what you want between the JOLTS, more ads out there for people that do get let go by Amazon, Salesforce, and the other companies. Smaller companies are picking these people up. The unemployment claims are dropping because if you get fired today, 2 weeks from now you got a job if you want it. It's really that simple. It's sad, but it's simple. And the pay you're getting, well, we're going to find out if labor numbers and all go up tomorrow. So leading into the big report of the week, which is the jobs report, you walk away with so far James Bullard, Esther George, they're all saying, and Khashoggi, they're all saying what? They're all saying the labor market's very strong, and it means the Fed has to keep going with interest rates till they get to the point where it weakens enough to weaken the inflation number also. The strange part is, I wouldn't be surprised if next week when we start getting numbers on inflation for the next couple of weeks actually, that they show that inflation is falling. I think you're going to have strong labor, inflation falling, and that means that any form of a recession that comes in should be very mild in nature. But how does the market react to tomorrow's jobs report? Because the market is convinced it wants to fight the Fed. It thinks the Fed will be forced to pivot. The Fed says no, and if you read the minutes yesterday, it's clear no, they're not going to pivot, and they're going to keep rates up longer than people think, and they've made up their minds what they're going to do. I'll let the market determine after seeing the report tomorrow what to do, and that's when I will be coming back in. So I let the algorithm traders do it, and away you go. Today's action in stocks, metals, all the crazy action you're having, the dollar up 100 one day, down 40 the next, up 80 the next, taking currencies all over the board with it. Too difficult. Let the market simmer down. And don't forget, today is the third trading day of the year. You're just going in to the fourth day. So the new money's coming in. A lot of traders are just getting back. We weren't open on Monday. They extended vacations. And this is a month where people that didn't go away Christmas, me being one of them, I'll take a few days off this month, all right? I worked through the holidays, make sure that we had everything going for our clientele. All right. So when we look at the gold market, you continue to stay over the 18-week average. The bias is clearly up. You're up 0.66% for the month, so you're up 2/3 of a percentage point. The market, as you can see, has got a bias that's up, but not a running up. And the difficulty is if the dollar goes up, it's going to be a headwind for the gold. If tomorrow's jobs report were to be a surprise to the downside, gold probably gets a good bid. You got to wait and see what you're going to get. What I don't want to see in gold is getting back under this, 1805 area. That's the only thing. Right now at this point, higher lows, higher highs, bullish. What else? You had a bullish crossover a couple of days ago. You went up, made new highs. You're getting your correction. I would think that support, X the report, will come in two levels. Number one, 1829.90 down to the 200-day average, the gray number at 1807.20. I look for the resistance right here. As the market got up to the Bollinger Band, I said you only stay over that 5% of the time. It does not mean you can't jump again tomorrow. Obviously, I don't know what the jobs data is going to say and how the market will react to it. You got two events tomorrow. You got the report, then you'll get the algorithms going, then people will think about it, and then they'll trade again off of it. So it comes in a wave. And remember that what I just said. I've seen this, been here, doing this. I understand that. Market was overbought, getting a correction out of it. When we look at the gold-silver ratio, as long as it's staying up, gold is stronger than silver. It means as it goes higher, I need more ounces of silver to get 1 ounce of gold. That's the way to look at it. And silver went to the upper Bollinger Band. I'm going to look for support if it hits the lower band. But the market has stepped out of a trend. It was overbought, hit the objective, and pulls right back like that. In the copper, what you've actually done is you've gone from the upper Bollinger Band a week ago to the lower band and right back to the 18-day average as China keeps talking what they're going to do. And their intent is what we talked. They're going to rescue their property market. They're coming up with many ways to do it, how they're going to go about it, and they're going to do it. The question is, when do they make that move? If I'm them, I'm waiting for this COVID wave, maybe just after the lunar holiday, to give formal announcements as to what they're going to do and when the monies get deployed. But that's me. I'm not Chinese, and I'm certainly not in the Chinese government. When you look at the platinum market, here you are, and you are over the upper band. You only stay over that band 5% of the time. When you pull back, it doesn't mean you're in a bearish condition, and you're not. What you are in is an overbought condition that works itself off by either correcting more or embedding, which means you get both numbers where they go over the green line and stay over there for several days or more. You're not even trying to do that. So we're in a corrective phase. If you slip back, 1038.20 is where I'll be looking for the support. If you get under 1015, this break low right here, that would do damage to the chart and put you back to a neutral picture. In the palladium market, this was a bear market rally right into what we talked about, the 18-day average, and now the market trying to figure out what to do from there. It hasn't done that. And in the dollar, this is the craziness that you face. Yesterday, I'll give you an example. I had liked the idea of being short the pound, and had I hung in there, today was a big winning day in it. Okay. And I told traders, very frankly, scratch in the marketplace. This is what I said in my morning video and in my written update, so I can prove what I'm saying. And that's basically what they did. And today it won. But it's because of what's going on here. You get bearish, you're getting bullish. It's all over the board as money's being thrown back and forth as traders are trying to figure out the impact of labor, what it's going to do to the Fed, what it's going to do to them sitting around. But one of the things that I'm watching during the day are what the pivot points have been doing. And if you're a pivot point trader, which is right what this is, the pivot points are having a heck of a time in the market. Now, pivot points are what day traders look at. I am not a day trader. I know a lot of people that love it. That's what they do for their living. They take a shot in the markets. They come off whatever. Some of them even set a certain amount of money if they hit it during the day. And that's the smart people. They stop trading. You hit a goal and you go, I got my goal. I'm leaving. I'm not going to give it back to the market. But what a pivot does is it's going to look and determine a center line, the white line. Below it are theoretical buy numbers. Above it are sell numbers. And what I teach you to do is tie in on the bottom of the chart the slow stochastic with it. I created a free, listen to the word, a free series so you learn how I teach. And then from there, I hope you move on to the enhanced Bollinger Band or the outside day course. And it'll show you what to do. How do you get this? It's simple, folks. Go to our website, www.iraepstein.com, and it's under free offers. Or the easier way, follow my finger, go up to the top here, give a click to the icon that you'll see. Click it, away you go from there. It's very simple. And then it'll take you right into that area. Choose what you want. Away you go with that. So it's simple. It's easy to learn. It is a tool. There's no tool that's the one tool for everything, but it is a tool, and I really believe that traders in front of computer screens, this is an important tool. If you're an in-out trader, or if you're like I am, I'm going, I have my numbers off my other work. What is this saying? Maybe I have to make a small adjustment. And I do, all right? So you're looking at different things, trying to get edges. The word is edges. Sometimes the edge does you no good. Other times you love it. I'm Ira Epstein. You have a great day. I'll see you tomorrow.